Okay, the next one up is CP8.1. CP8.1 has kind of a lot of a narrative, so we'll kind of take it step by step. It says that the AT Cross Company is well known for cross pens. The company recently reported the following amounts in its unadjusted trial balance, and it gives you some amounts. It then says assume Cross uses 1/4 of 1% of sales to estimate its bad debt expense for the year. Prepare the adjusting journal entry required at December 31st, 2010 for recording the bad debt expense. Okay. So in this problem, we're using the percentage of credit sales method, right? So we're only concerned with credit sales. If we take the amount of credit sales that we have and multiply it out times 1/4 of 1% or 0.0025, right? We should get 395,780. This is the amount of the adjusting journal entry. That's different when you talk about the aging method, right? But right now we're talking about the percentage of credit sales method. So multiplying this out gives us our adjusting journal entry. Debit bad debt expense for that amount, 395,780. And credit the allowance for doubtful accounts. Same amount. Okay, part 2. Part 2 says, assume instead that Cross uses the aging of accounts receivable method and estimates that the 1,007,000 of accounts receivable will be uncollectible. Prepare the adjusting journal entry required at December 31st, 2010 for recording the bad debt expense. All right, in this instance, when we're using the aging method, we have to back into the adjustment, right? It tells us in that beginning information, it gives you some account balances. It tells us that allowance for doubtful accounts has 952,000 as a beginning balance. So here's where we're starting. It tells us in part 2 that the ending balance is 1,007,000, right? That's what we want to be at. So we need to find what this box area is. The difference that gets us to that point we have here is 55,000 would get us there. So debit bad debt expense, 55,000, and credit the allowance for doubtful accounts by the same amount. Notice, you do not debit or credit bad debt expense and allowance for doubtful accounts for the 1,007,000, right? In the percentage of credit sales method, multiplying out the credit sales by the percentage you believe is uncollectible, that will give you the adjusting journal entry. In the aging method, you have to back into that amount, starting with your beginning balance, finding what your ending balance should be, and then saying, what does it take to get me there, okay? Part 3. Part 3 tells us, repeat requirement 2, except this time assume that the unadjusted balance in Cross's allowance for doubtful accounts at December 31st, 2010 was a debit balance of 10,500. In this instance, I wrote again for us a T account, but remember, it has a debit balance in this circumstance instead of a credit balance. The allowance for doubtful account, it normally has a credit balance. That's the normal credit side, but you can end up with a debit balance when you write off more than what you estimated would be collectible. So how do we fix that? How does that actually get fixed? Well, the next adjusting journal entry, the next period, you will again look at the aging method, the aging receivables list, and say, look, based upon all my customers that I have out here and based upon their outstanding balances into certain buckets of less than 30 days, 30 to 60 days, 60 to 90 days, 90 to 120, and greater than 120, right? What is it that I believe is going to be uncollectible? You find that amount out and then you make an adjustment. You back into where you got to go to get the balance right again, right? So even if you write off more than what you originally estimated was uncollectible, right? You then adjust the balance going forward to get to the right balance that you still believe is uncollectible, right? So to get us there, the adjustment that we have here, debit bad debt expense by 1,017,050 and credit allowance for doubtful accounts by the same amount. Notice that this amount is the sum of these two, right? You have a debit balance here. You've got to get rid of that entire debit balance. And then you also have to get to this ending balance, right? So you have to add these two together to get the amount that you actually adjust by, okay? On part 4. Part 4 says, If one of Cross's main customers declared bankruptcy in 2012, what journal entry will be used to write off the $10,000 amount? Well, I've written this journal entry up here for us simply because we've practiced this journal entry several times now in a lot of our homework problems. When you write off an account, you debit allowance for doubtful accounts, you credit accounts receivable, $10,000. Okay? Don't forget the difference between the percentage of credit sales method and the aging method. These methods, they might show up on your test, but you need to know how to calculate both. You need to know what the journal entry should be here backed into versus actually doing the calculation gives you the journal entry here. Okay? Let me know if you have any questions over CP8-1.